you can do what's called a ROBS, roll over a business startup. And that means you can use your 401k to buy the business. Um, and that way the money stays in your 401k, so you don't have to pay the taxes on the distribution, and you don't have to pay the 10% penalty on the distribution. Um, One negative to a Rob structure is you don't own your business, your retirement account does. So all the documents won't have your name on it, it'll have your retirement account's name on it. And then that also means that when you try to get money out of the business, it's going to become really tax inefficient. So you have to pay yourself through W-2 salary, which gets the highest ordinary income tax rate, and you'll have to pay self-employment taxes on that, which over 15%. So that's a big chunk. And then when you go to sell the business, instead of getting a capital gains treatment on the sale, money's going to stay in the IRA. It's not taxed when it's sold in the IRA, but when you go to take it out to actually spend it, it's going to get taxed as ordinary income. So, you can use the ROBS, but there's some tax negatives. But if the ROBS is the only way you can do it, then do it. Now, another option can be, and this is a little trickier, and you'll have to, if you're buying assets to start this, um, you get to depreciate those assets 100% in the first year. So let's say you need to take out $230,000 from your 401k. So normally when you take that out, you pay ordinary income tax and a 10% penalty, um, which you still will. So you take money out of your 401k to buy the business. That generates ordinary income tax and the penalty. But you buy $230,000 of assets, you depreciate those assets. So now you're positive, $230,000 taxable event from taking money out of your retirement account. You've got a negative $230,000 event of buying the assets. So those wash out to zero, and you only have to pay the penalty. Now, there's some pluses and minuses there, because, if you hadn't used up that depreciation benefit, you could use it later, but at least negates the negatives of taking it out. Really got to kind of sit down and do the math and decide if the ROBS is better, or taking the cash out is better.